It was just over a decade ago that the housing market collapsed. Prices plunged and millions of homes went into foreclosure. Are we in for a repeat? That question is starting to be asked. Diana Olick joins us right now with more. What do you think, Diana?
Well, Becky, I think the short answer is no, but there are some red flags. So I want to show you a whole lot of data to make the point, a whole lot of stats, all from Black Knight. For the 53.5 million first lien home mortgages in America today, the average borrower credit score is a record high, 751. It was below 700 back in 2010. And thanks to the run-up in home prices, those borrowers have record tappable equity, and that's how much you can take out of your home and still leave 20% equity in it. $11 trillion in total, up 34% from a year ago. Really record low mortgage leverage today. So that's a significant cushion in case home prices soften or even fall. Very little negative equity today, as opposed to 1 in 4 who were underwater back then. So what about the riskier loans? Well, there are just 2.5 million adjustable rate mortgages outstanding today. Compare that to 13 million in 2007, just before the subprime crash. Today, 1.4 million of those are facing rate resets higher. And yes, those are at risk. But back then, about 10 million of those were facing resets. Mortgage delinquencies are at a record low now, just under 3% of mortgages currently past due. And even with that jump in delinquencies during the first year of the pandemic, there are currently fewer past due mortgages than there were before the pandemic. There are still about 300,000 borrowers who have exhausted pandemic-related forbearance programs and are still delinquent. That's one to watch. The real risk, though, to housing right now is recession. If people start to lose their jobs and then they can't make the payments. Becky?
Yeah, Diana, all of those statistics make you feel a little better when you compare the now versus then. I think the bigger question still is, what about new buyers, first-time home buyers who are trying to get into this, somebody who doesn't have a home that they own right now that they can trade in for it? You can stay in your home if you've got one at this point, but trying to get in at a higher mortgage rate means affordability is just going to be a lot tougher.
Yeah, affordability is the real risk to the overall housing market right now, because even though we have these higher rates, which is slowing sales, there's still demand out there and still record low supply. So we have not seen those prices come down yet. We do expect to see them ease up a little bit. But the issue is, if you own a home and you can't move up, you're not going to want to sell it. If you want to buy a home, you're going to stretch, and that puts risk into the market as well. And then there's the question of those who bought in the last year, who might have bought at the top of the market, and then they have issues or during the recession, any financial stress. That could be another one to watch, Becky.